Hey everyone, thank you so much for joining us. And by now you're probably scratching your head going, this looks quite different than the reverse mortgage podcasts that I've seen Shannon do in the past, which are more highly produced. So this week I have a favor and I really need your help. And the help is your feedback. Please let me know in the comment section. Don't hold back. If you don't like it or you do like it, please let me know your honest opinion. Do you prefer this format that we're trying this week where we basically look at these posts online that we're finding, these stories, and we comment on them and we just kind of share that experience together? Or do you prefer the older format or the previous format that we've had for over the last year plus, where we have a more produced, polished product where we have the overlays and that sort of thing? So please leave your comments in the comment section below or email me at info@HECMWorld.com. I really want to hear from you because this podcast is all about you. And that's why we make these each week. So we want it to be of great value. So I came across a very interesting column on Financial Post, and it's the idea of using a reverse mortgage down payment as a gift to a child or a grandchild. So basically using a reverse mortgage to get the funds to give to a child or grandchild so they can make a down payment. And maybe that's a great idea, maybe it isn't. It depends on the situation of the individual. So let's look at this column together real quickly. And it says, for most, home ownership is fundamental to securing our golden years. And as reverse mortgage professionals, you know this is so true. And those who do not purchase a home or perhaps do so very late in life because they can't afford to get into a house today, which is the case for many, if not most, would-be home buyers, it can really have long-term consequences on that individual's future financial security, especially in retirement. So the Financial Post notes that parents and grandparents, are playing the financial fairy godmother, and they're trying to protect their children or heirs from that fate by basically gifting them money, proceeds from their reverse mortgage, to help them come up with a down payment for the house. It seems like a noble idea. But with this, we're also looking at the recent data. In the past year, they note that they've seen a 15.5% increase in new reverse mortgage holders, or those taking a reverse mortgage, using funds for those purposes. Now, this column is referring to reverse mortgage borrowers in our Great North, the Great White North, right? Our neighbors to the north in Canada. So that trend has led them to do a little bit more investigating. Now, for most, the home is the crown jewel of retirement because it's typically their largest asset. So let's look at see what the Financial Post say are the best, the pros and cons of using a reverse mortgage to help a child or a grandchild purchase a home. One is they say that reverse mortgages, and I've never heard this phrase before, are the equivalent of a very hungry tapeworm. Okay. Now, this is where they're a little off base. They say that 5-year fixed term rates, and this is for Canadian reverse mortgages, range from 6.4 to 6.69%, and that's higher than normal mortgage rates. But if I'm not mistaken, I think that the average mortgage rate in Canada, most mortgages there, by the way, are not your 30-year fixed. They're shorter terms, which is creating a lot of headaches for traditional mortgage borrowers in Canada. But they're saying that the cost is higher. So we'll cede that point to them. The next point they say that you want to consider on not using a reverse mortgage is that individuals live longer than they expected. So if you think about it this way, the longer you're in that home, of course, we know that a reverse mortgage, whether it's here in the States or in Canada, is a pure negative amortization loan, which means that that's going to be basically consuming equity over time. However, the home is appreciating at the same time as well. So using an example of a 3% appreciation, they say that it really could eat up all those funds by the time they're older. Now, if you're in your 90s, maybe you don't care at that point. Less borrowing power in the future for the homeowner that takes out a reverse mortgage to help their heirs, and that could be an impact as well. And of course, there's volatility in the housing market. Now, as that's a lesson that traditional mortgage holders learned, a hard lesson, I should say, learned in 2008 and 9 when we had the housing crash. And that really left people going, wow, my home equity is perhaps not always safe. So that is important. Now, the nice thing about the reverse mortgage here in the United States is that we have the non-recourse clause, which means even if the home value does fall, that they're not going to be responsible for any difference, nor will any other assets be encumbered. And this one I would call number 5, the jealousy factor. If you give one heir, a child or grandchild, a lump sum of money that you got from a reverse mortgage that you took out, and you help one to purchase a home, what are you going to give the other ones? And that could create some jealousy, envy, and I would say some very interesting Thanksgiving and Christmas dinners in the future. And there may be other options they note, such as a home equity line of credit or HELOC or cash out refis. But again, as we know, those require the servicing of monthly loan payments. So it does have an impact on their income over time. The arguments for using a reverse mortgage is that benefit of feeling really good about giving them what I call a living inheritance. So they're there to see the benefit for their children. And the impact, and this is a really good one for younger homeowners, is you're really giving them a leg up for the future, because the longer a homeowner waits, or a would-be home buyer waits to actually purchase a home, the more that's going to negatively impact their future retirement security, especially in retirement. So if you have someone in their 30s or 40s who just simply cannot afford to get a home, getting into a home that they can afford, and I would say also keep affording in the future, is really key to their financial stability. And with a reverse mortgage, of course, you get to remain in your home, which is a great thing, so you can age in place and also have the benefit of knowing that you're helping one of your heirs, your children or grandchildren. But it could have an impact on other assets as well, because it may basically put you in a situation where maybe you need to get some other funds. So this is an interesting concept, and one I wanted to bring up with you, because if you're speaking with somebody who's looking into a reverse mortgage and they can't really pin down the need, maybe it's because we haven't uncovered it. So if they're more financially stable, maybe not flush with cash, and they're saying, well, this reverse mortgage doesn't benefit me so much where I want to take one, you could always let them know, hey, do you have any children or grandchildren right now that are struggling to buy their first home? And in today's market, there's a very good chance that they're going to say, yes, they are struggling, because we have higher interest rates and we also have homes at record highs throughout most metros in the country. So there it is from the Financial Post. And again, please leave your comments and let us know if you like or dislike. Either way, tell us if you like this or don't, this new format. If you've been reading some of the major financial publications lately, it's been in vogue to blame the baby boomers for, one, the housing shortage, and also the concentration of wealth that has left what they say, well, many millennials out in the cold. And now some have even gone as far to say that boomers have committed generational plunder. Can you believe that? I'm not going to agree with that at face value, but the sentiment can actually be summed up in this humorous post I found on X. And here we go. We got a reverse mortgage. We don't need the house anyways. Just pick yourself up by the bootstraps. So it says, boomers fully aware that no generation after them will experience the American dream. Ouch. So boomers getting a reverse mortgage instead of passing a home on to the children. Well, it's a little snarky, but I would also say perhaps it's a little entitled. So let's go to the column that I found in Fortune, and it's looking at the baby boomer generation crisis. And this is referring to them being able to find a home where they can age in place. And Fortune is warning us of an impending housing crisis that's on track to even get worse. So let's take a look together. It says a selection of lucky baby boomers have won the housing market or the housing lottery, right? You hear the stories of someone who purchased their first home maybe in San Francisco or just outside San Francisco for, $75,000 in 1974, and now their home's worth a couple million, right? So that's just one example. But Fortune says they haven't met their boss yet. That is the elusive retirement home, a home in which one can actually age in place. Well, let's see what they have to say here. It says, what was once an excess supply of housing inventory has become a dearth, as Wall Street Journal reported of a shortage that's on the horizon. And the current rate of development, if it stays the same, if it's static at just 191,000 new housing units coming up by 2030, and that's short, by the way, of the 560,000 units they say that they need to usher in the boomer generation as they're aging. That's according to the data service NIC. So what are we talking about here? Well, boomers are not going to be able to stay, not all of them, in their existing home. And much of their wealth is tied up in the house. But let's say they sell and they're looking for a new place to retire. Perhaps it's a planned retirement community. But they say that even though the boomers are the richest cohort of our generations, they are at risk of an immense wealth disparity because many are finding themselves aging into a system they say that's not willing or equipped to care for them. In fact, we have a shortage of caregivers today, which is a very serious matter. In 2021, 11.2 million seniors, it's about 1 out of 3, were cost burdened. And we've covered this before here in HECMWorld, where they're spending in excess of 30% of their household or monthly income on housing. And that was according to a study from Harvard University's Joint Center for Housing Studies. And it said that though government programs provide crucial housing assistance to millions of older adults, demand drastically is outstripping supply with year-long wait lists in some areas. We never had a population pyramid that looks like this, said Eric Morton, chief executive of HECMWorld, as he explained to the Journal. The senior housing industry would need to develop twice as many units as they are right now to have any single calendar year that would keep up. And what's more, the early pandemic actually really hurt housing inventory, of course, as we saw that many projects just simply stopped or were seriously delayed due to supply chain issues. And developers are doing projects, but they're doing fewer of them because of the inflated cost of materials, even today, post-pandemic. And says years later, real estate advisory company Green Street tells the Journal that high interest rates and costs of building are still keeping them from meeting that housing demand. So they're building fewer units. And many seniors are unable to afford private retirement homes. And there are many that are just simply opting to age in place in their home. So here's another challenge that older homeowners are having that are seeking to right-size into a retirement home that will meet their needs, allowing them to age in place. And it's this, that many new developments are often luxury units that are catering to the more wealthy baby boomers, according to developers that spoke to the outlet. And that can leave many of our existing baby boomer generation out in the cold, on the sidelines, unable to find the retirement home that they really need that will allow them to age in place and also be around others that can keep them active and also have the services and amenities that are needed for them in their retirement years, which will leave them with the choice of, hey, we're going to stay put or we're going to try something else. Now, for those that are deciding to stay put, then they could utilize a reverse mortgage on the home that they've been in before for many years and finance those purchases of improvements, modifications to the home that will make it more safe for them to remain in the home as they age. And that is another strategy for those that cannot simply afford getting into a new retirement home in one of these 55 plus planning communities. In fact, we had a story on HECMWorld, I think it was about a month ago, where we covered one couple that utilized a HECM for purchase to get into a retirement community. So if they don't want to stay in their house and they want to get something a little bit nicer than they could typically afford, a reverse mortgage or a HECM for purchase can really help them boost their purchasing power and get the home that they really want with the amenities that are necessary. A recent edition of our Friday's Food for Thought series on HECMWorld, which was posted on Valentine's Day, Friday, February 14th, was discussing how you can become a star in your local market. And that is basically leveraging the local media to generate interest, leads, and funded loans for reverse mortgages. And I received some very interesting comments and feedback, but one was an email that I received from a gentleman who is working for Mutual of Omaha in the Reno, Nevada market, and that's Tom McDonald. And Tom is going to join us here in just a minute and tell us just a little bit how his story played out and how his marketing really works. So these are just some of the videos that you can see right here where Tom has posted these commercials. Stay tuned after Tom's interview. Immediately following that, we're going to show you one of his television commercials, but it's a great reminder how, trying something different. If something's not working, don't keep doing it. Try something different. And Tom does just that. So, Tom, thank you so much for joining us. Take it away.
Well, I moved to Reno in 2018, 2019, bought a house with a reverse mortgage in Napa, where I came from. I've been there for 17 years, and all my loans were by referral. I did a little bit of advertising, yellow pages, but not much else. When I came to Reno, I needed to somehow jumpstart my business. My undergraduate degree is in marketing, so I always think advertising of some sort. So I did lots of different advertisings in different ways around the city. Well, I've found over time that other advertisers use that to sell you more advertising. So I got a call from KTVN Channel 2 here in Reno, and they said, have you ever thought about using TV? Well, I never had. My assumption is it's just plain too expensive. It's not going to fit. But my other nature is to experiment. So I said, okay, well, let's try 3 months and see what happens. Well, it exploded is probably the easiest way to put it. We filmed 3 commercials. They filmed it for me. I got approval through my Mutual of Omaha compliance people and marketing people, and they started running. And in the first 3 months, I got 37 calls. And it's like, I don't have any other advertising that I've ever done that has done that kind of numbers. So I've continued to do it. At the time, we budgeted $1,000 a month. I tried another station, Channel 8, and it didn't seem to work nearly as well. And their advertising exec didn't seem to want to care, where the Channel 2 people were really very caring. They threw in some freebies here and there. They worked with me, whatever we needed to do, it was good. And then recently the AE at Channel 8 changed. The gal called me, so I started using Channel 8. So I budgeted $1,000 at 2 and $1,000 at 8, and still getting plenty of leads. Unfortunately, currently, most of them are short to close. But one day, they're in my database, they will pop and we will have some more. It's kind of like my retirement plan.
How many years ago did you begin these television ads?
I'm going to say 4 years ago.
Okay.
I've been here for a year or two or so before the Channel 2 called me.
And what would you estimate that you've closed? Because that's where the money meets the road,
Right.
the rubber meets the road. How many would you say you've closed since you began your television campaigns?
Well, I could probably look it up and give you a good number, but I did look up my 2022 numbers. That's when I made President's Club with Mutual. So that was 9 out of the 35 loans I did in 2022.
Fantastic.
I closed that year. And as you know, a lot of times you work with somebody and then I'll get a call 2, 3, 4, 5 years later. Okay, Tom, I'm ready.
Absolutely.
And so some of those are still popping.
What advice? I'll say this again because I can edit. I'm stepping all over myself. What
You should see me when I do my commercials.
Right. Yeah.
It takes an hour to do 30 seconds.
Right. Multiple takes.
Yeah.
What advice would you give our listeners and viewers, Tom, as to how maybe they can get started? Just the real simple steps to begin their own television ad campaigns.
Well, check with your local stations. Now, I imagine in the Bay Area, Channel 2 and 4 and 8, and they may be too expensive for you, but talk to them. And if you're in some smaller cities that have their own TV stations where they're not getting TV from the major stations away from them, definitely check with them. But to talk to them, I think. You don't know what you don't know. And if you think it could be within your budget, if they can work out something that makes some sense, try it. 3 months experiment, see what happens. it's nice to kind of, as far as I know, I'm the guy in Reno. I have all my friends say, "Hey, I saw you on TV." It's kind of fun. What I really want is for other people to see me on TV and call. But then when you're experimenting, you need to know where the calls come from. So I use a system called call8.com, KALL8.com. I create a fake number. So I initially used a whole bunch of sevens, Reno. Channel 8 is a whole bunch of eights. And so I actually get an email that tells me who's calling, sometimes what their address is, their phone number. And so I know which station they came from by using those different numbers. So if you do a lot of advertising, keep track of where they're coming from. If I don't get that, then maybe I'll ask them, how did you hear about me? It's not like we get 100 calls a day and we can't keep track of that. So
Right.
You definitely want to find out what works, because this has been the best thing that's ever worked. And I've done advertising all over the place for the last 20 some odd years. And I'm just amazed by how this worked.
Well, congratulations on becoming a star in your market. I had no idea that you had succeeded so much. And so thank you so much for reaching out to myself and to HECMWorld and sharing your story. And to our viewers, I would encourage you to take Tom's advice and call your station, at least do some investigation, and you may be pleasantly surprised by the results. Tom, thank you so much.
Thanks for having me, Shannon.
You may have seen the articles that many of us in our 60s and 70s may be living to 100 or beyond. One thing I hear from many of my clients is, if I knew I was going to live this long, I'd do things differently. Well, now is the time to do things differently. Even if you have no mortgage now and are doing just fine financially, this might be the time to look into a reverse mortgage, providing a growing line of credit that may be quite large when you may need it later in life. I'm Tom McDonald. Call me.